Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, May the 7th. The year is 2023. Let's talk trading. It's time for the weekly open and gap. As always, these videos are for educational purposes only. Your results may differ from mine. Now, I know I actually got busy on Friday and I didn't do a weekly wrap-up, so we'll take a look at what happened last week and what's going on right now with the weekly open and gap. So for the month, right now we're 100 pips above the monthly open. We're making a new high, just 1.5 pips off the high and 217 off that low. And for the week, we have one gap that hasn't filled so far. We gapped down and filled the gap. As you can see, we're above the weekly pivot. We are putting in a new opening range for the weekend. Or actually, we'll be doing the opening range for the week on this Monday candle. You can see we're above the opening range for the month by 84 pips and above the opening range for the year by 551. Looking at the yearly open, we are 563 pips above the yearly open. We're making a new high for the year, and we're 850 pips off of the yearly low. We had an inside bar 5 days ago, and we had an inside bar on the week 3 weeks ago, and on the month 3 months ago, and we are above all those inside bar ranges. And we only have a handful of inside bar action on the daily, and on the weekly we still have a few pairs, more than a few, inside bar action on the monthly. As you can see, we are just over 8 hours into the trading day and no pairs have exceeded 100 pips in range so far. You can see here we've been pretty much up above the daily/weekly open so far on the pound, and not enough range, only 29 pips for the rat zone to take effect, so we'll have to wait. Pivot plan. Near the pivot, bias is long. Near R1, bias is short. R1's at 2671. So we're about 20 pips away. And we're starting a new H4 candle, at least on my broker. We've missed the pivot by 9 pips, down at 2615. We're missed the weekly pivot. We haven't even gone towards it. And the monthly pivot has been taken out for this month. As you can see, we barely broke out of the upper wick zone. Now we're putting on a retrace here, back into it. Looks like that 50 line is putting up some resistance. The 50 psychological. Now, last week, weekly range 217 at the 58th percentile. That's still a pretty much muted range, though, so I think that's about 5, maybe 6 weeks in a row we've had a muted range now. So far this week we broke out a previous high. Last week we broke out by 69 pips, but we did not break out of the low last week. And you can see here we pretty much last week started the same as this week, or this week started the same as last week would probably be a better way to say it, with price not dropping below here. You can see here we touched the previous week's open and shot up. And for you imbalanced traders, you can see right here, there's this big imbalance being put in. So we don't drop down. That imbalance will want to be filled. You can see down here, we've got lots of imbalances to fill. Last week, high minus open, 101 pips, and open minus low, 117. So buy zone traders were rewarded. Last week, only 18 pips off the high at the close. So that didn't even really get out of the rat zone, but close minus low 200. So weekly rat zone traders, the green rats were rewarded, not so much the red rats. As you can see here, price action simple. Let's see, let's push that down to M30. And you can see here, it looks, so far looks like we're putting in kind of a double top. Let's see if price gets knocked back down. Higher low, lower high trades once again. Looks like they were paying off. Even on the M30, normally we look at M1 or M5 on these. That's something, when your chart's scrunched up, you can use this, but a lot of times I'll just hit monthly and then shift to a lower time frame. Then it usually gives me what I want to see. So you can see here, we had a lower high break off of a 3-ball, and that was good for a couple of pips. You know, I read other traders' forums and watch their videos, and I have subscribed to a couple of their blogs or newsletters, and because you can never know it all in trading, you can always learn something, and sometimes you need to hear something over and over again. And one of the traders had mentioned something to the effect that big losses is what kills a lot of traders. And then I listened to a video, and that particular trader said that, you know, we all know enough, but what happens is that we're kind of in our own way. And the problem is that when you know what to do, but you're not successful, there's a gap or a gulf between, you know, what you know and actually putting it into practice. And that all reflects back on you, which is something that Walmal and I, you know, talk about a lot, or have talked about a lot. That it's really you. It's all on you. You're what makes the difference. And what you have to do is you have to figure out what's one thing you can change, because to improve, you have to change something. And that's a lot of people, they want to change their method, or they want to change what pair, or maybe they switch from equities to stock, or equities to Forex, or equities to crypto. They're always looking outside, but, you know, as I've stated, you got to look in the mirror. Because once you figure out what you're doing to keep you from being consistently profitable, then that you're going to get that aha moment, and then you're going to go to the next level. You're going to leave the barely profitable or the loser, and you're going to become a winner. But, you know, I know some traders that I talk to, you know, text with or email with, they're constantly shifting and trying to find something outside of them. When really you just have to figure out, list what's wrong, what you're doing wrong. For example, maybe you're letting your losses run too big. Maybe you're hesitating, not taking all the trades you should. Maybe you're trading way too small, or maybe you're trading way too heavy. And so what you need to do is after you list those things, you pick one, just one, and you work on it till you have it conquered. And then you go on to the next one. Because you can't fix it all at once. You really can't. And, adding more technical knowledge isn't gonna make that much difference. It really isn't. It might seem funny coming from the guy that's written hundreds of indicators and still comes up with new indicators, new systems, new things, but that's because sometimes I see things that I haven't really seen before or observed before or they were there, I just never noticed them. And then I do, and then I write an indicator or two, and then maybe I say, hey, this could be a method unto itself, or possibly you can use it to help. But it's just the one trader. It's funny because sometimes when I hear other traders say what I say, it's I guess in the one way it's reassuring, and in the other way it's kind of funny. It's funny because I've gotten so much grief over the decades for some of the things I say, like trading is simple, and price either goes up or down. All this talk about sideways is, it's just range bound, but within that range it's still moving up and down. So, one of the takeaways is that you just have to figure out what's holding you back, what's separating you from profit, and then go ahead and work on that one thing and stick with it for a while till you lick it. If you're failing to place your stops, then you can set an indicator that looks for open trades, and if it sees an open trade and there's no stop, it puts a stop there. It could be as simple as that. And once again, folks, traders, I don't do EAs for public consumption. It's not that I don't write them for myself sometimes, but I just don't write them for public consumption. Just too many things can go wrong, and I don't want to be blamed for them. So let's take a quick look here at the range so far in May, 218 pips. And let's see, the ATR for May is 638, so we've got a few pips to go there. Oh, clicked on the wrong one. And then let's look at the year-to-date range accumulated. You can see here we've already pushed up by what, 170 pips. Extended that range. So we're not the lowest. Okay, let's see. We wanted to look at close minus open percent so far. So 4.64 so far this year. So, fellow traders, I hope you're having a profitable month of May so far, and I hope you had a fun and safe weekend. And when you sit down at your trading terminal, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.